Options trading sounds complex, but it is essentially just a contract to buy or sell a stock at a set price later. At its heart, an option is a legal agreement giving you the choice to trade assets without being forced to do so. Every standard option contract represents 100 shares of the underlying stock, which is why even small price moves can have a big impact. To understand how they work, look for these three things: the target price, the deadline, and the premium you pay to own it. Calls give you the right to buy, while puts give you the right to sell. Traders choose these based on their market outlook. The price of an option, or premium, is heavily influenced by how much time is left and how much the stock swings. Remember that while options can be used to protect a portfolio, they also carry the risk of losing your entire investment. Options trading is a complex topic. Always do your own research before placing trades. Thanks for watching and stay curious.